And we're back with Forum Daily's market update with Catherine Murray, host of The Buck Stops Here. All yours, Catherine. Take it away.
Thanks, Nima. Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. We are seeing markets trend lower today. This, of course, following the U.S. Federal Reserve's decision yesterday to raise rates by 25 basis points, which was very much as expected. But I think during the press conference, there were a number of key areas that the market picked up on that sent it lower. Yesterday, as well as today, the Dow down by over 300 points. TSX faring a little bit better than that. But let's just pull back and see and understand what the Fed did say yesterday. As I mentioned, they raised by 25 basis points, and they eliminated the language saying that some additional policy firming might be appropriate. So in other words, that's a bit of a dovish comment that they might actually pull back on raising rates. So the market was actually okay with that. And they actually said as well, Fed Chair Jerome Powell, that their decision to raise rates really will hinge on the economy. But there was no specific comment about the regional banking turmoil. And I think that the market took that as somewhat tone deaf. There's a lot of concern, and we're seeing it today, which I'll get to in 1 second, about the weakness in the regional banks. And in the United States, there's 4,000 regional banks. Very different versus what we have in Canada. There's, 5 to 6 main banks, and that's really the model that you see in most of the world. The issue with the regional banks in the United States is they do so much of the lending to small and medium-sized businesses. And if, in fact, the lending is tightening there because there's a risk and a run on deposits, that will slow down the economy. So the fact that there wasn't enough said perhaps about that, I think is concerning to the market. The other reason I think why the market is down following the U.S. Federal Reserve's decision yesterday, again, is in the details. And one of the details, of course, is that the Fed did not talk about being in a pause mode. And I think a lot of market participants are saying, look at the economy, look at the regional banking system that is in turmoil. And why wouldn't you think to pause raising rates? So I think taken together, the market is very concerned that the U.S. Federal Reserve will continue to raise rates and really tip the U.S. economy into a recession. And that, of course, translates and trickles down into the Canadian economy as well. When we take a look at the regional banking system right now, PacWest, PACW is the stock ticker there. So a bank in the United States is down 56% today. They're looking at strategic options. Also importantly, on the banking front, First Horizon in the United States, FHN, TD Bank here in Canada, of course, was looking to buy that company. That goes back to February the 28th. They have mutually decided to part ways, citing regulatory uncertainty in terms of whether the deal would even go through. But of course, First Horizon has been gotten caught up in the regional banking crisis in the United States. So maybe a little bit of a sigh of relief as it relates to TD shareholders. Stock's down mildly today, but I think that's really just more of a market move. They will be paying a $200 million break fee. TD will be doing that. And First Horizon, that stock is down 36%. Stepping back, other items to be aware of. WTI is down mildly today, but it's down 11% over the past 3 sessions. That is because, again, people are concerned, investors are concerned about a recession and maybe a hard landing. And if that's the case, you have less demand for oil. We also, of course, heard from the ECB today that they are raising rates by 25 basis points, and they are still in tightening mode. Also, perhaps a reason as to why the broader markets are on the weaker side, because people also believe that perhaps they should be, the ECB, in a bit of a pause mode, and that is not what we heard from them today. Adding to the mix, of course, as well, is the U.S. debt ceiling. It seems as though that is going to come down to the wire in terms of whether or not to raise the debt ceiling and continue to be able to pay the bills in the United States. So that also poses headline risk to the markets, to the broader markets. Now, of course, in the past, we always see it goes down to the wire, and then they end up raising the debt ceiling. This has happened time and time again, but nonetheless, it is a headline risk. When we take a look at earnings results, I'd say stepping back, the results have come in better than feared. So that's a positive, but the bar was very low, looking to be down negative territory, call it about 6-7%, coming in a little bit better than that. Speaking of earnings, Shopify, they came in better than expected in terms of their latest quarterly results, setting that stock up by 19%. Also, recall Moderna. That stock was a huge focus name for so many investors during the height of COVID. They came in with better than expected results. That stock's up by about 3%. TSX is down mildly. The Canadian dollar is higher versus the US dollar. We had earnings results from BCE, so Bell as well as TELUS coming in a bit better than expected, but BCE stock is down. And CNQ within the energy space, the results came in less than expected. And lastly, to point out, the Toronto and Vancouver home sales are actually picking up a little bit.